Hello everyone, K Kim here. Welcome to the market update. Today is April 21st, 2017, Friday. Hope you guys had a good week trading this week. What a week we've had. I mean, just looking at this candle, so let's just observe this week's candle and I can see pain. This is why you don't want to micromanage the stock market, because when stock market do this, this is where it gets very, very painful, really, for both longs and shorts, right? We're talking like swing traders, overnight day traders, short-term traders, and anybody who just trying to figure out what's going to happen tomorrow, what's going to happen next couple hours. It's just a nightmare. I mean, it's funny how this market just knows our human emotion, how it works. I mean, just on this day, what was the psychological behavior, or not psychological behavior, but psychological sentiment, our mental sentiment, emotional sentiment of everyone in the market on this day? This was what? Last Thursday, right? Friday was a good Friday. Market closed, and So Thursday was the last day. This was this day, and then I did a video there, and we talked about this level is a current support level, and I didn't say it was gonna bounce there. Right? I didn't know if it was a bounce there. Nobody does. It's just a potential level. And obviously we did have this support that was initially broken. So we had that 2 days of downturn. So that support was broken. So the next support was this support. So I think a lot of people on this day, on the 13th, was so sure that the market was going to gap down and we're going to probably come down and fill these gaps. I think this was when last lot of people were expecting, and a lot of bears and shorts are probably doubling down here. I've heard always when the market comes down, comes down like this, and there's going to be always somebody somewhere shouting crash. Like I said exactly go review what I said last Friday. There's going to be somebody somewhere shouting market crash. And it happens every time. It happened here, it happened November, it happened June, July, the Brexit, it happened February. And then it looked as though this thing was, we barely saw any buyers coming in on that last Thursday. This thing just plunged, right? As you can see. And then this thing just out of nowhere gapped up, and it just pretty much shocked, right? Shocked the world. It didn't shock me. I don't think it shocked any long-term traders and active investors. Because they don't really care about these couple days, even couple weeks of fluctuation. I really don't care. That's why I don't micromanage. Then this was probably all the bulls are like, the whole thing is gonna go all-time high, it's going to the moon, and just, bulls are so hyped. And the next day this thing sees this and just like, where was the follow-through? Now this thing really, really started to look more like, is it a bear flag before going lower, right? Maybe more bets to the downside. And the next day, boom, we have a bearish engulfing candle. Aha! There is a bear flag. This thing going lower, right? And then I think this was when, more people started coming out that was just a bull trap. This thing is ready for, 229, possibly even 227. Some people shouting that. There's always somebody, right? And the next day, another gap up, right? And it just brings the price back up. And then today, it looked like it was going to completely wipe out yesterday's gain. But really it didn't, because this was a close. So we still have some gains there. So we had this process of these up and down, shakeout, violent move, this volatility that's really frustrating these short-term traders trying to micromanage, trying to figure out what's going to happen today and tomorrow. So, and this is a reason why you understand these levels. I mean, this is, remember I told you guys that I'll keep these levels intact. I did not move this pivot level. I did adjust this. It was somewhere right about here, but I adjusted today to kind of accommodate that move here. I also adjusted my 20 MA to the high. So setting is high, 20 MA setting is high, and the 50 MA setting is now low to accommodate the recent price action. You can see how the 20 MA high is perfectly getting respected as resistance here, here, here. And it was perfectly respected as support here and here. So it seems to be that's what market is being very sensitive to, is the 20 MA at a high setting. 50 MA low setting has been support. So that's what market has been sensitive to it. So you can see how we did get slightly below it, but we got right back up. But that's where we found support here and here and here. Same thing here. We came down, gapped down, got right back up. So we still, the bears were not able, the sellers were not able to bring the price back below this rising 50 MA. Again, the setting is low. So that's kind of what I made a little bit of adjustment to accommodate the recent price action last few months here. So obviously, we're going to continue to observe these two moving averages. We're sandwiched between. We got the 20 MA coming down and with a 50 MA going up. So this is going to be a key moving average going into next couple weeks. And we have a key downtrend resistance is this. And we have a key rising pivot. This is a rising pivot, meaning it was a resistance before, now becoming support, right? And the key level for the buyers is 236.26. We get above that level, there's a good chance we're going to get back up to make new all-time high. It's not going to be pretty and easy just because we have this gap down. It's probably going to have a shakeout or something like that. But key level to reclaim, to shift minor term momentum to bullish would be 26.26. Key level for bears will be about 231.97. But I think I can even move this up. The reason is because you see these gaps. These two gaps are still open. Okay, so now we have a 3 gaps open, as you can see right here. This was, this gap here. This is a downside gap. Okay, that's a bearish breakaway gap, downside. This turned out to be exhaustion gap. We now know that that's exhaustion gap. So these two gives us that there was a bearish sentiment going into this week with these gaps here that was never got filled. But now we have another gap. We had a big gap down here on this day. This was when everybody was chanting for Black Monday. And it's always somebody somewhere calling idiotic things like that. And the market just knows how to punish them, right? Anyway, that was that big gap down. Futures were tanking that Sunday. It came down, dips were bought. And then it got up quickly, and then this was a Fed. It gapped up, rallied. It attempted to break out to the upside. Well, it got filled right away, and then we fizzled. We saw the hammer came down. And see, these kind of price action is where it kills most traders because they get chopped to death, right? And most of you, if you're in that shoes, listening to this know exactly what I'm talking about. So anyway, so we got these gaps here, breakaway gap to the downside, that's still open. This is exhaustion gap, that bullish gap, or that gap was exhaustion gap, which is bearish. So these two gaps told us there's gonna be volatility. and then we came down, and then now we got these two gaps that are still open. Okay, so we got breakaway gap, possibly continuation gap. So next week, some of the levels to watch are these levels. If these gaps don't get filled, the longer these gaps stay open, it will favor the buyers. But we got two gaps now. So let's say if this thing gets filled and then gets up and then do something like that, then this gap is now known as a breakaway gap. The bears, what they need to is fill this gap, because a lot of times when gap gets filled, it becomes a support, instant support. So fill this gap, gets back up, comes down, fills gap, gets back up, and then tankage. That's kind of what the bears are looking for. The bulls, what the bulls are looking for is, but obviously you want to at least hold these levels, make sure the gap remains unfilled. That would favor the buyers, and then possibly break out of this, reclaim the 20 MA, and then gets above 236.26. So that's kind of my unbiased analysis, giving you both scenario, possibly bulls and bears. So now, well, I'm a bull. You guys know that I've been the biggest bull since February 2016, and since the early November and October of 2016. So in my biased outlook, I'm pretty neutral here, to be honest. Though buyers did see some pretty good bullish momentum here like this week, and just really, really irritated the hell out of the bears just last 4 days here, just with these gap ups, gap downs, and flushes and gap ups. But I think there's still a lot of bearish pressure here. Banks are weak, which we're going to talk about in a little bit. So I think there is a chance, if these gap gets filled, that this thing comes down to 229.57. But I don't believe this thing coming down any lower. I think the worst case scenario will be 229. If this thing comes down here, I'm buying this dip hard. I'm telling you right now, if it comes down, I'm buying this dip hard. This is a level where it's residing, that 100 SMA is residing. At the same time, there's a gap here. But I'm being ahead of myself. So let's see how this level gets played out. So I'm pretty neutral at this point, even in my bias standard, because I'm holding multiple long positions, not just on Spider, but I have many stocks that I'm holding since last year, and accumulated recently in these levels. And so I'm hoping to see some move to the. I don't have any short positions. And I've been letting you guys know that even when this thing was coming down, I didn't close any of my long positions because I was fearful. I did close many of my long positions, because it yielded it yielded profits and it was overbought. So I closed some of those positions, but not because I was fearful that the market is going to crash, right? So I've been actually accumulating some stocks here in that vicinity, and here also, and obviously, I'm still holding calls on IWM, which I blogged about, and Citigroup, which is a losing position so far. So at this point, I'm pretty neutral here on the market. I do want to talk about 65-minute chart here quickly. Looking at 65-minute chart here, that's a 65-minute chart with 50 MA. Pretty similar what's going on here to, not really similar, but the consolidation-wise, the December and January of December of 2016, January of 2017. You can see we got the falling resistance. But I think the key point is that we start to kind of cultivate these higher lows here. I think that kind of gives buyers to kind of gather that momentum. That's kind of what we saw here, and here. You see these higher lows. But what it needs to start to happen is, you see how 50 MA active supporting the 65-minute chart. What it needs to happen is it needs to come out and break this recent resistance right here and start to build these higher highs. You see that? High, high, higher, high, higher, high, higher, high, right? Low, higher lows. We do have higher lows, but we don't have higher highs. See, that gives a bit more bearish sentiment. But let's say if this thing starts to do this, like that. That's why I said that 237 238 is a very, very important level. Once it starts cultivate higher highs like this thing is ready to make new all-time high. If that happens, I think Spider will do very well. But again, let's not get too ahead of ourselves. Let's see what happens in these two levels. Again, I won't change this chart here. We'll revisit next week. The moving averages here. Some of these pivotal levels here for buyers. You want to reclaim 236.26. For bears, you want this thing to bring it down and fill these gaps and continue to cultivate lower highs and lower lows. So let's see what happens next week. We'll go from there. I'm going to go through these quickly. I'm not going to look at gold and silver today. I'm just going to look at Russell and the financial sector, end the day or call it a night. Russell 2000 finally broke out of this resistance here. I tweeted out yesterday chart that we want to hold 136.82. We want to get above this. Is a pivotal level. Why? Because you can see the 20 MA is now starting to get above it. You can see we saw a little bit of buyers in that vicinity. We held above this. We are starting to nullify this lower high. Remember what I talked about, lower lows, higher lows and higher highs? Well, the Russell 2000 has cultivated higher low, and now something is going on here. Okay, we got some of these levels. If this thing starts to cultivate these higher lows and higher highs, Russell 2000 might be the key index. Okay, key index to turn this thing around. If Russell 2000 starts to break out of this, I think the key level for Russell 2000, I'll mark it with red and we'll keep track of this next week as well, is 138.53, right? But I think this first key level has been reclaimed. We are staying above that 20 MA here. This is level has been kind of a congestion zone all around. So if we can aim to maintain, I think even this gap right here, you see this gap, that gap, if you're a buyer here, this gap, if you can get, if the buyers can protect this gap and make sure this gap doesn't get filled next couple weeks, then that should give, you see this gap, breakaway gap, follow through gap, and we're so Russell 2000 much bullish action here compared to Spider. So let's see if we can able to. I think that ultimately, if you reclaim 138.53, I mean this thing is ready to go. Next week, if we do something like that, I will, update my journal that I've been long since about some of these levels. I think 139, 136, and I bought some at 134, I think. So I've been accumulating there. I'm still holding full positions on Russell 2000 IWM calls. So let's get the banks. Financial sector hasn't been doing so well with the Goldman Sachs, earnings volatility. You see the earning came down here. I think banks been struggling. I think a lot of people are kind of looking at this as a leaning head and shoulders. Watch out if this thing starts to do something like that. It can nullify that with that invert head and shoulder pattern. So that's something to keep an eye on. But I think that's why the bank's been struggling with the, Goldman Sachs struggling here. But the financial sector, XLF, is actually holding this level, while the this 20 MA and 50 MA acting as resistance here continue to fall back or continue to roll over here or continues to come down here. So I think those are the resistance level. The ultimate level, obviously, for financial sector is 23.93. If we can aim to get above that, that's the level that needs to reclaim. But we still have a resistance here. So what he needs to do we're probably gonna see a lot of volatility here. And when I say volatility, I don't mean volatility index. I mean up and down, a lot of head fakes, ups and down moves that could be ahead and expect it. Before I let you guys go, I do want to share with you this monthly chart. Let me actually go to monthly. I want to, on the financial here, if I actually go and do this, this is a monthly. You can see how this old resistance is potentially becoming a new support. Keep in mind, banks just broke out of this 17 years of rising channel. See that? And we just broke out and we're just retesting it right here. What that means is if we do see a bounce, we can able to get up all the way to all-time high. That's a very, very bullish signal. But if we do see a fake head fake here and this became a kind of a massive bull trap, things can get hectic here. But we do have this rising 20 MA on the weekly. This is a monthly chart that has been acting as support, so that's a level to watch. But this monthly chart definitely that level to watch here. This rising channel, we just broke out. A lot of times when these long-term supports or resistance, we break above it, it's gonna want to retest it. And once you get retested and finds a support, there could be a big move to the upside there. So, well, have a wonderful weekend, and good luck trading next week. Let's see what happens here in that vicinity on the spider, and I'll come to you if I see any kind of any kind of progress next week on these price action. I will do maybe write an article or something like that. But have a good weekend. Talk to you next week.